Welcome back, everyone, to the Joseph Carlson Show. We have a very exciting episode to get into. We're going to be looking at this blistering report from the Wall Street Journal. This is an article that they just released fresh today. And in the category of the type of article that you can release, I'd consider this one to be a hit piece. I think it is a hit piece, which I described as a very poignant, very direct, I think, bare thesis on a company, saying that the valuation doesn't make sense or the company's struggling one way or another. And it goes through argument after argument of why this company's in some case or some way not in good shape. In this case, what the Wall Street Journal is doing is going after Tesla. They say why Tesla stock rally, which it's gone through an incredible rally recently. It had a 13-day rally streak. It doesn't make sense in 8 charts. And like I said, this is an extensive chart-driven data visualization with context article. And I think it's very interesting. I want to go through it and see what these arguments are from the Wall Street Journal, see if it really is just a hit piece or if they do have any actual data, if there's anything that actually makes sense behind it. So we're going to be looking at this. I'll be giving my opinion on it as well. We also have something else that I have to mention, and this isn't necessarily even investing news, but this is such an absurdly crazy story that I have to go over it. The rescue crews race against time to locate the missing Titanic submersible. It's not big enough to be a submarine, but this little mini submarine, it's basically like a little tube that they put under the ocean, has 4 people in it. It was on a voyage to see the sunken Titanic, and they can't find the thing. It's in the bottom of the ocean somewhere. The people in it are running out of oxygen, and they're trying to find it. I'm going to go through this article because I think it's fascinating. It does have something to do with risk taking and the type of risks that I would take in this situation, but it also is incredible when you get into the details of what this thing is made out of. For example, just one little spoiler alert here, one little teaser. The control system for this little submersible is a PlayStation controller. I kid you not, that's what it is. And the details get even more alarming as we go through it. So I'll be talking about that as well. So welcome back, everyone. We have an exciting full episode to get into. We're going to be jumping into first Tesla and my portfolio. I have a tech portfolio called the Story Fund. I started it in 2021. I track it against the benchmark index, which is considered to be widely the S&P 500. So I'm benchmarking it against SPY. And I show the full history of it over time since the very beginning. Right now, it's caught up. It's really had a comeback with a vengeance. We went from being down nearly 30% to now we're flat. We're basically flat, a tiny bit below zero right now. So all the losses, the $40,000 have come back. We've really recovered a lot. And that has a lot to do with a big recovery in tech stocks, AI stocks. It's really brought the whole market up. But this portfolio also is highly concentrated into a couple companies. Some people say that this portfolio looks similar to the QQQ. That is a misread of what this portfolio actually is. It's not that similar to the QQQ. The QQQ has more of an even weighting that's based on market cap of all the major tech companies. It has Meta, it has Nvidia, and it has them weighted according to their market cap. The weightings in this portfolio are dramatically different, with companies like Amazon making up 34% of the portfolio, 3 times the weighting in the QQQ. Netflix, one company, Netflix, makes up 24%, which is around 5 times the weighting in the QQQ. So although these names do exist in both indexes, the weightings alone make them dramatically different. Google is weighted 19% in this portfolio, which is double the QQQ. So there's a far more concentration into these specific companies. The weighting is completely different from the QQQ. So I see that there's some comparisons made there. Both of them do have some tech companies, but I don't even necessarily consider Netflix to be a tech company. I consider it to be more of a media company. Technology isn't the main driver of the company. Now, having said that, we've had a remarkable comeback with the portfolio. We're basically flat right now. I'm going to continue to track this every single week and every single month. One of the companies that's missing out of this portfolio is Tesla. And that's what we're going to be looking at. This hit piece from the Wall Street Journal on Tesla and what their arguments are about the valuation. And we're going to see if any of this makes sense or if they're really just trying to go after Tesla. The reason that I don't own the stock is because I consider car companies to be a bad industry. I think that Tesla is a good company in a bad industry. And I think it's going uphill. It has a lot of well-capitalized competitors trying to replicate everything it does. I think it's trying to build out an ecosystem, but that's a difficult proposition. To do what Apple did with iPhones is very difficult, to make such a powerful ecosystem that people have to pick your product. So Tesla's doing that. The stock is being rewarded. Right now, Tesla has zoomed back up to nearly an $850 billion valuation. The PE ratio is at 28.8, almost a 30 PE for a company that mostly sells cars. So it's not being valued like a car company. And every single day this year, especially over the past month, Tesla is just all green, up more and more every single day. Now $269, another 3.5% when the rest of the market is down. The relative outperformance over the past month has been dramatic. Tesla investors are getting renewed enthusiasm. It hasn't gone back to its all-time high, but it's not being valued like a car company. It has a lot of intensity bullishness behind it. So let's go ahead and take a look at why the Wall Street Journal thinks that this rally isn't justified and it doesn't make sense. They start off saying that the market value has increased by about $250 billion over the past month. So 30 days and Tesla's market value has gone up $250 billion. Even by Tesla standards, the recent rally is dizzying. The stock will open after a long weekend above $260 at last seen in September, before a disappointing third quarter update started to run bad news. So this is the story of the stock price. In Q3, it had a bad quarter. This is the bad quarter. Right there, they reported it. There is a little bit of a demand issue. Tesla was lowering prices before that quarterly report. The margins came in a little bit lower than expected, and the stock price suffered. When growth is slowing down, when you think you're having demand issues and margins are going down, that tends to crush stock prices. So Tesla went from around $60 at the time, from $260 to just above $100. It's really a bleak moment, and it went down quickly. But look what's happened. Tesla has had a resurgence. It had a huge run after that, then it trailed off again, and then it almost had a parabolic run, a huge spike in stock price over the past month. Now, they go into the explanations. Why is this happening? What is causing Tesla to go so fast, so high, so fast? One commonly cited explanation is artificial intelligence. A record-breaking 13-day streak of gains in Tesla stock started about the time the chipmaker NVIDIA gave a punchy sales forecast based on booming demand for AI applications. Marco Iacchini, Senior Vice President of Vonda Research, which analyzes investor flows, pointed out that small shareholders have bought into Tesla and the AI theme at broadly similar times over the past year. So this guy, Marco Iacchini, his research has determined that, he's just pointing out basically that when AI gave their super bullish quarter, where they said that they're going to make a ton of money selling chips and AI is a future, it caused the whole market to continue rallying. The AI basket of companies, which includes companies like Microsoft, Google, and NVIDIA and Amazon, all of those have done relatively well since then, but Tesla's done even better. It's just shot up in comparison to the AI basket, but even further. So this analyst is saying that it's basically just AI stocks are doing well. People consider Tesla to be an AI stock, and so Tesla's doing well. And although correlation doesn't mean necessarily causation, there is a high correlation between Tesla and AI stocks. You can see Tesla doing really well, extremely well, as AI stocks were going up. When AI stocks went down, Tesla went down even further. When AI stocks went up, Tesla went up even further. So Tesla seems like a leveraged play on this basket of AI stocks. Whatever direction they're trading, Tesla seems to trade even further. The Wall Street Journal doesn't necessarily think that this makes sense. They say that, quote, "We think the market wants to believe that Tesla is an AI name first, an auto company second." That's what Morgan Stanley's saying. And that's clearly what Tesla's wanting to sell itself as. Elon Musk, who is a marketer, and he's part of, I think, he's free marketing for the company. He said that Tesla is an AI company. It's basically a robotics company that happens to sell vehicles. It's just one of the products, but overall they view themselves as a robotics company. So they've already marketed themselves this way, that they are an AI company first, a car company second. And it seems like Tesla investors are buying in to this thought process. Although the latest AI hopes have been focused on large language models that power ChatGPT, some investors appear to see a read across to driverless cars. I don't know how you make that leap. Large language models and ChatGPT, a consumer-facing text app going into the auto-driving driverless cars, that's a connection that I don't necessarily see. I think that if Tesla was going to use that technology, they would have already used it. I don't think this is something that's new, a new discovery for Tesla. So I don't see the read-through there. Regardless, the market seems to be. Tesla's car-making business, but a lot of it has to do with the promise of RoboTaxis. This is the next possible explanation. So we have it trading in line with AI stocks. The next thing that they point out is maybe it has to do with RoboTaxis. That is, after all, what most Tesla bulls say is it's like the big grand prize at the end of the rainbow. You have the big prize of gold there. It's the RoboTaxis. We have Tesla and we have such a great story. And at the end of that story, we have the pot of gold, the RoboTaxis. They say that this isn't necessarily a new idea, but it's getting fresh attention. One market analyst said that out of right now, the market cap of Tesla, the nearly $900 billion, the majority of their valuation on it is RoboTaxis. That makes up around $700 billion. The next portion is the full self-driving, which is a component of RoboTaxis. And then you have the cars. That's only $0.09 billion in this valuation. So it's an odd valuation. It's a little bit difficult to understand this chart. But the basic promise here, or the thought here, is that RoboTaxis are the biggest driver of the valuation and the increase over the past month. What the Wall Street Journal points out here is how this doesn't make sense. Going along with their entire article, the valuation increase in Tesla doesn't make sense. They say pinning hopes on Tesla's RoboTaxi today requires a double leap of faith because the technology is at an experimental stage and Tesla isn't even the most visible experimenters. They point out that other companies are doing RoboTaxi type of stuff, Google being one of them with Waymo. GM's Cruise already operates a fleet of them in cities including San Francisco and Phoenix. Now they point out that the way that Google's doing it and GM is more limited. It's city by city, so they're geolocation locked in the city. But when you think about RoboTaxi, the big benefit of RoboTaxi is being able to go to the grocery store and back. That's probably 99% of use cases, going from one place within a big city to another place within a big city. So if there's other companies that are doing that, then they're solving 99% of use cases. It's a very rare use case to go from part of the country, from one state all the way to another. So I actually somewhat agree with the Wall Street Journal on this. Other companies are doing RoboTaxis in a way. And even though it's not the grandiose drive anywhere full self-driving, even having it be geolocation locked from city by city, if they get most American cities, then that solves 90% of the use cases of RoboTaxi. They also point out that even if it was RoboTaxis that were driving the valuation increase in Tesla, that doesn't really make a lot of sense. Wherever RoboTaxis are on the uncertain road to mass adoption, they offer a problematic explanation for the latest Tesla rally. Over the past month, GM has underperformed Ford, which doesn't have a business like Cruise, while Alphabet, Google, stock is broadly flat. They show the chart here. So this is why it doesn't make sense. We have Tesla going up tremendously over the past month, up around 40% in a month. And this is because of RoboTaxis. The problem is Ford's also up a lot over the past month. The next closest to Tesla, and Ford has no RoboTaxi investments to speak of. It's the furthest away. Then you have underneath Ford, you have General Motors, which does have more RoboTaxi investment than Ford, but it's trading less than Ford and Tesla. And then you have Google, that's flat over the past month, that has the most significant RoboTaxi investment by far, aside from Tesla. So if this was to be driven by RoboTaxi enthusiasm, you'd think that it would be Tesla, Google, and then General Motors, and then at the bottom, Ford. But that's not what we're seeing. So the data doesn't really correlate with this. Investors are, for some reason, uniquely bidding up Tesla, and it doesn't seem to be driven by robotaxis. Now, the next possible explanation is a pretty simple one. Maybe it's the charging network. Tesla did just recently have a deal signed with Ford and GM to have them use Tesla's supercharging network, and that coincided with this latest rally. That should help Tesla. They say it should help Tesla wring better returns from its fixed assets so they can make more money that way, but the response seems disproportionate. Investors never really warmed to the independent charging network builders such as EVgo, given the capital intensity of their rapid growth. So building out a charging network is incredibly capital intensive, probably doesn't have the best returns on the tangible assets that they're building out, and you can tell by the independent charging network. This company has gone from around $17 in share price down to $12, and then recently down to $5 in price. So EVgo stock price is dropping. Tesla is just rocketing to the moon based on what? Maybe the company's doing better with its network. This possible explanation is a hard one to believe. We have Dan Ives here from Webush Securities wrote that this is an AWS moment for Tesla. The comparison to Amazon that he's making is that this company that's otherwise capital intensive just came up with something like AWS, this big profit driver for the company. And what Dan Ives is talking about is the ecosystem of the company. So maybe this is the next best reason. And in my opinion, I actually believe this is the most correct way to look at Tesla being a very powerful earnings company in the future and justifying its current valuation. Although I don't think that this is set in stone, and I still think it's highly risky, I do think this is the best possible explanation. The company is growing its service business. So this is the ecosystem explanation. We have the three different blues here. The big one at the bottom, this is the automotive sales, car sales. Then we have services right here, the little sliver above. This is the services business. And what you can see is even though this is a small portion of their total revenue, it is growing rapidly. And although the Wall Street Journal says that it doesn't seem like it's going to catch up to the total revenues anytime soon, at least for the foreseeable future, I think the Wall Street Journal is being a little bit short-sighted here. If Tesla is able to grow their service business to 20% or 30% of their total revenue, and they have very high margins with that service business, that could be a very, very good story for Tesla. That is precisely what Apple has done. Apple has crafted an enormous ecosystem. They've made it so people want to pick their products over others continually. They make it very difficult to leave their ecosystem, and then they have very high returns on their digital assets that they sell when you're within their ecosystem. I don't think Tesla's there yet. I think it's very difficult to see Tesla getting there. It's a difficult path. But if they were to have that happen, then the valuation today would be justified. So this explanation, I think, is the best. And I think what Tesla bulls are seeing right now is a company that is making iterative progress towards that ecosystem, building out their services little by little, building out their charging networks, and having other companies use them. It's a little bit piece by piece of building out that story, which I think is a bullish thing. So I don't necessarily agree with the Wall Street Journal here. They're writing off the service business so quickly. I don't think they should be doing that. Other than that, the last explanation they give, which is more of a, quote, down-to-earth explanation, I think is the weakest one, but we can go over it here. They say that Ben Rose, an analyst at Battle Road Research, points out that the rally started when Musk appointed a new CEO at Twitter, alleviating worries of him getting distracted. So the reason that Tesla rallied 40% in a month is Elon Musk is less distracted. I don't buy that. I think that Elon Musk is important to the story of Tesla. He's the talking head, the figure piece, but that can't be worth 40% just because he hired a CEO. When I go through the possible explanations of why Tesla is doing so well over the past month, I think it's a renewed enthusiasm over AI. I think that's a very good explanation. I don't necessarily think it's renewed enthusiasm over robotaxis. I think that that's unlikely. We've known about the robotaxis for a long time. Nothing has really changed there. And like they point out, Google's not really doing well over the past month. So I think it's renewed enthusiasm over AI, which Tesla has traded in line of. And I think it's investors becoming more bullish on their ecosystem, potentially having that grown into full size. Now, in my opinion, I'm not going to be buying Tesla stock anytime soon. I think the company's valuation right now leaves a very little margin of error. Tesla has to execute perfectly. It does have to build out that ecosystem. It does have to grow its service business. It does have to create RoboTaxis to justify its current valuation. If all these dominoes don't fall into line like investors are expecting, I expect the valuation to come back down. So to me, I think it's dicey right now. I think it's at a scary valuation, not something I'm going to personally be investing in. Now let's go ahead and move on to this story, which I just think is remarkable. There is this crew of 4 people that went into this submersible. It's not considered a submarine because it's not as big and complex as a submarine. So it's a smaller, tiny, more rudimentary version of a submarine, which is basically like a little tube that you put underwater, and they wanted to go down and see the Titanic. They wanted to see that in person. And this thing has gone missing. There are rescue teams desperately trying to find them before they potentially run out of oxygen. Before we even dive into this story, I first want to take a look at this news report on this very submersible before it went underwater. So this is like a year ago before it got lost. But this is what we're dealing with here.
An experimental submersible vessel that has not been approved or certified by any regulatory body and could result in physical injury, disability, emotional trauma, or death.
Okay, so it's not approved by any regulatory whatsoever. So if you go into things like airlines and you go to public transportation, they've all been approved by different authorities for safety inspections. This thing is just a private vehicle that someone created. No requirements for anything. There's no regulatory body whatsoever authorizing this thing. Now, I may not be the most adventurous person. I like simple pleasures of eating good food, talking about stocks, going on vacations to places where I'm firmly on land. But just by the definition there, just by what this is, a tube that goes underwater to the bottom of the ocean that has no regulatory authority, there's no chance I'd ever get in something like this. Not a chance. Let's go ahead and keep looking at it here.
Oh, take your shoes off. That's customary.
Okay. Wow.
Inside, the sub has about as much room as a minivan.
So this is not your...
That's it. This is what people willingly pay to do. Keep in mind, people paid to do this. They said, yeah, I want to spend a lot of money to climb into a dark tube, have someone seal the door shut behind me, which I can't open. I'm totally reliant on them opening the door back up. And then I'm going to be plunged into the bottom of the ocean to see wreckage of a ship, basically just a bunch of metal, what's left of a ship that sunk a couple hundred years ago. That is what they're paying to do. Now, I could not be paid to do this. No amount of money. You could come up and offer me $10 million, $1 billion to go on this voyage, and I would respectfully decline. There's no way I'm doing this. It just seems like a nightmare to me. But here you have it. And I think that this fits 4 people, if I'm not mistaken. Maybe a little bit more, but I think the number was 4.
Your grandfather's submersible. We only have one button. That's it. It should be like an elevator. You know, it shouldn't take a lot of skill.
The Titan is the only 5-person sub in the world that can reach Titanic depths.
It's the only one. Isn't that confidence inducing? It's the only 5-person sub. So 5 people can go into it that can reach the depths necessary to see the Titanic.
2.4 miles below the sea. It's also the only one with a toilet. Sort of.
You get to have the pleasure of having someone use a toilet a foot from you as well, with no separation at all between you and the person using the toilet. So hopefully you don't have any stomach issues. Hopefully none of you go out and eat a bunch of tacos and stuff before you get in this thing, because you're going to have a very bad time.
And yet, I couldn't help noticing how many pieces of this sub seemed improvised.
There's hand drawings for the levers there. Somebody went in with a little marker and drew this. This is, your life depends on this thing.
We can use these off-the-shelf components.
I got these from Camper World. We run
The guy's bragging that one of the lights is from Camper World. So apparently this vessel that you're going into, this tube that you're trusting your entire life with, going 2.5 miles below the surface of the water 2.5 miles underwater. And he's acting like he went down on a weekend and assembled this thing from a Lowe's or Home Depot trip, getting components from Camper World.
The whole thing with this game controller.
Come on! It seems like...
Oh my gosh. Did we just catch that?
World, we run the whole thing with this game controller.
It's a PlayStation controller. The ship, this thing is controlled by a PlayStation controller. No offense to PlayStation, but if I'm trusting my life to something, I don't want it to be a PlayStation joystick. You couldn't pay me any amount of money on planet Earth to go to the bottom of the ocean in this thing. Any amount of money. $1 billion, $1 trillion, I could be the wealthiest person on Earth. Not a chance. I'm quite happy where I am above ground. Now, surprisingly, and I know shockingly, unfortunately, it has run into trouble. It was expected to come back up like a day or two ago, and the thing is still underwater, which is very concerning at this point because it has a limited amount of oxygen. They say that on Monday, it had about 70 hours of emergency oxygen left. So the clock is ticking. They have about 2 days left at this point. The search involves aircraft and surface vessels, was intensifying in an area about 900 miles off of Cape Cod. And it's in water depths around 13,000 feet deep. Such a large area to search. And the problem is, it's not like this is a search area where you can fly a plane and just look for someone. It's underwater at a depth that people can't look. There's only advanced machinery that can go down there. Now, they go on with this, and some of the details here get even more concerning. GPS doesn't work underwater, nor does radio. That makes it quite difficult to locate it. So the search efforts are very limited. They say that the best case scenario is that they lost communication, but the thing pops up after they have dived. So they basically come back up, everything's okay. That's the best case scenario. Now they get into other things that could happen that are not quite as good. There's an expert in submersibles, these tiny submarines, that said that there's a couple basic things that could be happening. It could have had a power blackout, fire, or flood, or it could have become entangled in something. The Titan is untethered and relies on battery as one power source. So any of these things would be total devastation. Blackout, fire, or flood. If it became entangled and couldn't rise back up to the top, those are all really bad outcomes. What couldn't be determined is the kind of power backup the craft has. The primary control of the Titan is a PlayStation controller. Right there from the Wall Street Journal. See, we're not making that up. It literally is a PlayStation controller controlling this thing. And that enables the pilot to direct the submersible. If there is a software crash, we can't rely on that and the computer behind it. You would rely on something much more rustic, such as individual controls for the thrusters. So if your little PlayStation controller loses power, then you have to do the other controls that are probably a lot more difficult to use. Now, the worst part of this whole article is how they describe what would happen if some of the materials failed in this thing. They say if you are 11 kilometers down, if something bad happens, the results are the same. When you're in very deep water, you're dead before you realize that something has happened. So it's not a problem. That's the way this expert describes it. You die so fast. It's such an instantaneous thing when you're that deep. If anything happens, that you literally, it's just not a problem. You don't feel anything. It's just within a second, you've gone from living to dead. And it causes an actual seismic reading when the water collapses, when the air collapses that fast. So the pressure down there is immense. The materials they make this thing out of are they're prone to having problems. And I don't understand why anybody would want to do this to see the Titanic. In my opinion, it's crazy, a risk not worth taking. But I'm not the adventure-seeking type, I suppose. But even so, I hope the best for them. I really hope that the rescue crews can find them, or that they do just pop up and everything's okay, and that we get a happy ending out of that. But either way, it's a crazy story. That's all for this episode. I hope you enjoyed, and I'll see you in the next one.